10 seconds, John. All right, I think we're live here. All right, joining me is John Newell. John Newell has 35 years experience in the investment industry, acting as an officer, director, portfolio manager, and investment advisor with some of the largest investment firms in Canada, focusing on precious metals, equities, and commodities. That's a huge bio. I don't think we have time to go through all of that today, John, but how are you, my friend?
I am very good. Thank you for having me. It's great to be here.
Awesome. And what's your title right now? What are you? What projects are you involved with?
So I'm the president and CEO of Golden Sky Minerals Corp right now, and we're working 2 properties right now in the Yukon. A property called the Bullseye, which we just finished a trenching program, and assays are pending any day now.
Okay.
And we're moving drill rigs to Hotspot, which is on the Alaskan Yukon border. So we're pretty excited to get some drills going.
Beautiful. Well, you know what? I look forward to watching the news flow on that project. I know you're really passionate about it, and in mining and gold specifically. What's the market cap of that company right now?
It's about 4 million, a little less than $4 million. There's about 9.4 million shares out, and it trades at around 36 to 40 cents.
Okay. Because I remember Mr. Sprott saying anything under 5 million market cap would be a huge bargain. So, you were under that.
I totally agree with that statement.
So you know what? I got to give my uncle Dean a shout out, because I was talking to my uncle over the last month, I'd say, and he was asking me for different ideas, and in the speculative junior mining space and developers and all that. And I thought, you know what? I got to talk to John Newell, because here's a guy that's been doing it for decades. And then I've called you a couple of times over the last few weeks, and you have this energy about you, this excitement that you have for precious metal stocks. And obviously I've been following your work for at least 2.5 years now, and watching really your magic, the targets that you put up on these charts, and then, like, for example, a metallic, the MMG, it's exceeded your 3 targets now. It's saying around 97 cents, and I think you started following it and charting it when it was like 20 cents. So stuff like that is just, it's crazy, right? Where do you want to start?
Well, why don't we just start at the in the PowerPoint at the gold 3 targets, and kind of set the stage by looking back a little bit and seeing where we want to go.
Okay. So this is a presentation that you put together here.
Yeah.
All right, walk us through it here. All right. So gold's 3 targets.
Right.
Right.
So actually, when we talked up in the Golden Triangle a little in November of or in the spring of 2019, that's what that gold chart looked like, the first chart on my left-hand side. And then, of course, it's met 2 of the targets, and we've always had a target of 2465 before 2022. So that just, these gold charts and gold stock charts, or just say gold, this gold chart, is just reflecting the record amount of debt relative to GDP, that, equity valuations are pretty expensive and they could get more expensive. But really, it's kind of telling us the future by looking at these charts and figuring out targets. Gold and silver are fundamentally cheap and have been for some time. I think when we talked the last time, we talked about the breakout above 1370 as being, right around the corner, and that's in fact what happened. And there are, pretty steep, horrific corrections along the way, but it's definitely a bull market for gold and silver right now.
So specifically, where do you sort of see us right now after we've had this breakout? Let's maybe even go back to last week. You had the Fed come out and basically say they're going to let inflation run. Seems like there is some buy the rumor, sell the news sort of situations happening there with the traders. But then gold recovered, and you see a bunch of these higher lows, right? So that's a very bullish thing. That's something you would see in an uptrending market, right?
Yeah, it's we just had some up and down backfilling, and I think some profit taking too, on both gold, silver, and the precious metal shares. And the precious metal shares have really been in kind of a 2-month consolidation, or 6 weeks anyway. And it looks to me like we've had 1 leg up, 2 down, 3 up, 4 down, and it looks like we're starting another leg to the upside. But I think that chart might come in a little later on.
Okay. Well, let's continue on then.
Yeah, so basically this is it wouldn't be unreasonable, in my opinion, to now think about 2450 area as a reasonable target for gold. And at 1300 it looked kind of outlandish, but at almost $2,000 an ounce, it looks kind of doable now. And that's kind of we've gone through, gosh, 8 years, 9 years of sort of corrective action and just breaking out. So it looks to me like we've got some daylight above us as we've made new highs above that 1920 area from 2011.
So I'm looking at this chart here, and I see the references to 1974, 1976. You want to sort of explain why you're going back to the 70s, and what's so important about that?
Well, gold was fixed in the early 70s, late 60s at $35 an ounce. It ran up to, in 1974, to 200, and then corrected 50% down to about $100. in that correction, a lot of players in that 2 years correction, a lot of those players back then in junior gold stocks really got hammered. But if you look at the mid 70s, the mid 70s was a period in the United States where there was race riots, busing. Boston was burning. I lived there at the time. There was it was kind of weird because you played football with all your buddies, and there was kind of a pitting against whites and blacks, and even though you were friends on the football field, it just there was kind of a tension, and it feels a lot like that now from looking at the reports in the United States. But you had women's equality, women's liberation back then. We have trans gender equality now. So the market reminds me, the gold market reminds me a lot of the mid 70s right now. And I say that because you also had some real pressure to keep the price down during those late 60s into the mid 70s. And then it just took off. And that's kind of feels like there's been a suppression of the gold price in this last 8-year period. And now it feels like it's time to go. And if you look at the fundamentals around that, you can see, for example, there hasn't been a big mine found in, gosh, 3 or 4 years. Mine supply is dwindling. The whole COVID thing. You're seeing supply dwindling and demand increasing, largely because people go to gold as a safe haven and a protection of their assets. And actually, back in the 70s, portfolio manager textbooks or security analysis textbooks, it was very common to see a weighting of 5-10% in gold, and that's all disappeared from those textbooks now. But I think what we're trying to get across to people maybe is to have some of their capital in precious metals, and my favorite precious metal shares because of the leverage that they bring.
Well, do you support the police and fire? And the reason why I ask you is because $16 billion of the Ohio Police and Fire Pension Fund approved a 5% allocation to gold to hedge risk of inflation.
Yeah.
So that kind of backs up your, your theory, right? Looking at this chart, it definitely seems like a powerful move up to your 2022 potential target. I mean, that's pretty telling right there. What would you say is the most important number, price target here over the last 10 years to get past on this chart that we're looking at right now? What would you say was the most significant number or price target?
I think 1370 was that big breakout. A lot of companies, while there was quite a few companies making good money, there were still the marginal producers that it was pretty skinny at 1350, and to make commitments on opening new mines or expanding mines, that might have been a little dicey. But now that you've broken free of those 1,350 kind of shackles and gone up to 1,900, 2,000, I think that frees up a lot of boardrooms to make some pretty good decisions. We're seeing that already right now with a lot of the companies. So
Yeah. Well, I remember the last time you and I spoke officially on a podcast was actually when we were in the the crash there in March and April. It was a big liquidity event. Everybody was just running for the exits. I think I spoke with you a few days into it. And I mean, everything got hit, right? Gold stocks got hit. Everyone was just selling. Everybody was over leveraged, and we were speaking. And you were pretty bullish then. Were you buying any stocks at that point?
yeah. I mean, you mean this in March?
In March, yeah.
That shock and awe, that's what
Yeah.
I call it, shock and awe. It happened so fast, you wondered what was going on because you saw companies like Nova Gold and the Dow Jones Gold Index break to new highs, and then they all did a Yui. So, yes, I did buy some stocks at that time, but and I bought some private placements also at that time. So
Nice.
uh,
All right, let's move down to the next chart here. What are we looking at here?
yeah, this is just, we can see that there are converging cycles, and 2020, there's a big, when cycles converge, it can be very, very powerful, like 2001, and times when they all kind of match. It's not exact, like it looks kind of perfect on that chart. It's a little off, but yeah. And so we can see when those cycles converged, gold took off. And so in terms of price target, 1920 was the target because it was obviously the old high, and that would, basically the theory would be that people who bought at 1920 were happy to get their money back and exit what they thought was a miserable trade. And then there are like Fibonacci and Gann kind of combination or extensions that could go higher. I only use 2465. I'm not trying to say that's the top or anything. I just have believed it's a reasonable target that could be achieved, given those cycles all kind of converging at one time. Plus, the 2001 low was very powerful also. But even in 2001 to 2005, it wasn't an easy market. If you weren't in the right stocks, you were watching paint dry in the early part of that 2001 low.
Mm-hmm. Okay, let's move on down to the next chart here, highlighting the gold futures.
Yeah, this kind of just is it's pretty standard. It just kind of backs up why we could be close to further upside. And seasonally, doesn't always work, but seasonally it looks like a pretty good time for gold.
So basically this chart here shows the future contracts and a calendar year of seasonality behavior.
Yeah, as an average.
So we're just about to go into September, so this could get really interesting.
Yeah, it could.
Yeah. So if you had some SLV calls that expired in January 21, 22, you'd be holding on to those.
Yeah, I would. Yeah, I would.
All right. especially if they're already in the money. Okay. Anything else on this chart here?
No,
Okay.
it's yeah, and this is just supporting the idea. If you go back through the 70s and when you go back through all of the past 40 years or 50 years, when gold makes a new high, you usually, even in like the Canadian dollar or the Australian dollar, when you make a new high, you usually, but not guaranteed, go up about 25%, 20 to 25%, in some cases a bit more, before you get a significant correction. And if that was the case now, we would, see close to $2,400.
And that's in 2020.
Yeah, that's really it's just an observation, but yeah, it would be very quick.
Man, my SOVs will be worth a lot of money if we can get this to happen in 2020. All right. Okay, that's pretty cool. So how much data do you use to back that up? Like, I mean, how many times has this happened where you get a 25% increase?
Well, I've gone back to gold in different currencies when they've made new highs, in the Australian dollar, in the British pound, in the Canadian dollar. And also I have that chart that I did because I was curious about when gold makes new highs. There can be, after they go up 25%, there can be very steep corrections historically also. So it's not a straight line up.
Yeah. So I don't know if the audience can see John right now, but if you look at the wall behind him, he's got all those charts. Okay, let's move on to the next slide here. All right, you want to explain this one?
What chart is that?
Gold moves after new highs lead to 25% moves in 1978, 2009, 2020. So that kind of just validates what we were talking about.
Yeah.
All right. So gold and Canadian dollars. Let's move on to that one.
Yeah. So you can see when gold starts its rise after a long base of sideways movements, which we had in the 80s and more recently, you can see that the next 5 years, or I don't know if it will be the next 5 years this time, but we have 5 years of a pretty bullish gold price in Canadian dollars, and that makes Canadian gold mining companies and Canadian exploration companies a pretty good place to be with that kind of tailwind of strong gold prices in Canadian dollars. So that and you can see when it made a new high that it's hard to see, but there is a bit of a correction in there.
Okay. All right. Next, the overbought caution. This is pretty important here. Do you want to explain that?
Yeah. So, I mean, there are lots of, this is just general sort of information. It's pretty easy to get. There are a lot of sentiment indicators, but I think it is important to watch sentiment about 2 months ago, sentiment reached 100%. And there have been some historical precedent that when you get up there in that sense of bullishness, that you can have a bit of a correction. And I sometimes put out on LinkedIn, be careful or caution. It's a little frothy. So that doesn't mean, sell all your gold positions or your SLV calls or anything. It's just be prepared for
Some
the
volatility.
potential of a bumpy ride for a little while.
Okay. Moving on. USD looks close to breaking down. So this is a very significant, important chart because as you know, when the US dollar is going down, usually gold is going up, correct?
Yeah.
We've had some interesting times where you see the US dollar going up and the price of gold going up. Do you want to kind of explain this chart?
Well, I think also going back to the spring of 2019, we talked about this at the camp on that interview. But the US dollar, while it was going up, it was going up from a pretty low spot. And it wasn't really, like gangbusters going up. And if you look at it from its inception, it's basically been going down for a long time, with some pretty significant rallies in the meantime. But from 2018, even a little before, it's kind of gone sideways, shake up a little bit. But now it really does look like it could have a sustained downward momentum into 2024. That might be going out on a limb.
Okay. All right, let's get into the precious metal shares outperforming the Dow Jones Index.
Yeah, so this is just looking at the this is just looking at the Dow Jones gold index, which I like because it's got a lot of the mid cap Bema Golds, Dundee Precious Metals, Tarangas, some of the mid cap. So I like that index a lot. And against the Dow, we saw it move up sharply, and then it's been kind of consolidating. And the first target would be that ratio to break to the upside, which, if you think about equity valuations being expensive and the Fed sort of using stimulus to support the markets, if in fact the gold shares break out, I think that's pretty. I think that's very bullish for gold shares in general.
All right, let's go on to the next chart below this.
Yeah, this is just I see kind of a fractal pattern where back in the 70s, we saw the gold the Dow gold ratio get really beat up, rallied, and then went down to 1-to-1 in 1980. So 1 ounce of gold bought 1 Dow share, and then into 2008, I believe, you got up to it took 44 ounces of gold to buy one Dow share, and then a big correction. So I just see the symmetry of the up moves and the down moves, and if that down move continues after breaking that trend line, we could see the potential of a 2-to-1 ratio, which is simply would be saying 20,000 Dow, 10,000 gold, or some ratio, 30,000 Dow, $15,000 gold. I'm just saying that's what would happen for 2-to-1.
Yeah, so that's where people get these numbers from. Like, so Pat was asking if you think gold can go to 10,000. That would be your answer. That would be the 2-to-1 ratio.
Yeah.
Okay. Ooh, the inflation index. Let's go over this one.
Yeah, so we see, just like we saw, I just forget exactly, but 2004, we saw the inflation index. This is Martin Pring's inflation index. It's his proprietary inflation index.
Okay.
And he posted on stockcharts.com, and you can see that it's breaking out much like it did in 2004. And inflation in mining is a double-edged sword, because while the US dollar might devalue, also there's costs associated with
Mining.
hiring geologists, equipment, tools, cement, steel, all that. So the gold price has to outrun that inflation index. But I think it's important to keep an eye on the inflation index and be prepared that things are going to get expensive.
Can we put this presentation in our YouTube comment section? Is that possible after?
Yeah.
Okay, cool. That way people can kind of, if they're watching this and it's not live, they can put the presentation up on another tab and they can follow the charts along. I know some people were messaging me that they were having a hard time seeing them. So we can review them either way, but we'll just do that after. Okay, moving on. Gold shares overlay, the gold chart on the gold chart.
Okay, so this is my favorite chart. Remember the when we talked at the fireside chat, same way down, same way up. It wasn't there yet. It hadn't moved yet. And if you look at that chart very carefully, you'll see the gold shares, just like gold at 1370, went sideways for 8 years or so. And now you see the gold shares have gone sideways and have just recently broken out. But they are lagging badly the price of gold, so precious metal shares are, and they have historically traded at a premium because of the leverage effect of gold shares, of what gold the price has on their earnings.
So basically the party hasn't started yet.
Yeah, if you one of the stocks that we actually might have talked about, Equinox Gold, was around $5. It had 3 targets. It's met every one of them. And now it's going into a big picture target that's, twice the price of where it's trading at now. And all I'm saying is it's those kinds of stocks that are now just going into the indexes that will have to do the heavy lifting to get this up to
the long-term target.
Not just a long-term target, but to start trading at a premium to the gold price
I see.
where they should be.
Yeah, so it'll lead the momentum.
And at the time, there were a bunch of renovation stories. They were taking assets and renovating them under one umbrella, and they did a magnificent job. And now they're in these indexes.
Okay.
Where before they were kind of three penny juniors that have been put together, and then a bunch of guys have worked their magic on them.
So just for our audience listening, we will get to some of the ideas that John has, on specific stocks and stuff like that. But it's really important that we go over these charts, because I mean, this is how someone puts a thesis together. This is how they validate the things that they're seeing over the years. So like I've been interviewing John now for at least a year and a half, and these were all targets, that the places that we're at now. These were all on the charts of potential targets, and now we're here. So I've already seen proof of concept. All right, moving on to the XAU targets.
Yeah, so if you put your thumb over it's met two of the targets, exceeded the second target, and you can see the same thing. If you put your thumb over everything above that resistance line at around 110 or so, you can see that the same way down is happening right now. And this is an index that started in 1980 at 100, and earlier this year, it was 70. So in 40 years, this index is up 50%. So it's not exactly it hasn't been exactly the greatest investment space to be in the XAU.
Okay.
But the targets, obviously the target is the old high of 290, and then an extension target of 340.
Okay. All right, so we're going to move on to the Huey targets. You want to explain this one? I know you like the Huey targets.
Yeah, so the Huey is the gold bugs index. It was traditionally unhedged gold stocks. I'm not sure that that's the case anymore, but at any rate, I have a chart which I'll update the presentation. The highest target on that, which is trading at around 340, the highest target on that I get is 900 and something. Having met almost that 381, I have 375 on another calculation, but the high has been about 373 or something. Anyway, this the Huey, we'll see in a little while how badly it's underperforming relative to other things.
Now, what's the most important part of this chart here, if you're looking at it?
Well, since 2001, we've made successive higher highs. We had the shock and awe of COVID, and it didn't make a new low. 2016 ended a cycle and apparently started a new one at the end of 2015, early 2016. That correction was longer and deeper than I believed it would have been from 2016. This is generally speaking, because in that time frame, many companies have done very well or didn't go down very far, like Bema Gold or Dundee Precious Metals. There were some, and then there was Kirkland Lake that was exceptional, and a few others. But basically, since the low of 2001, we've made higher highs. We've never gone below 2016. And that was when we had the COVID drop down, we came right down to that upward sloping trend line and never really went below it.
Just bounced
But
off it.
and the volume came right in. I mean, Nova dropped from 12.5 to 6.5, and the volume just came right in, right on time, and it took that stock back to $18 in about 10 to 15 days.
All right. Can we get to the 3 E's now?
Yeah.
So Wes, go down to the 3 E's, skip down a couple charts there. There you go. Let's explain this.
Yeah, this is just for the foundational work, say just basically saying that charts are the combined minds of all the world making decisions on companies, and in this case, precious metals companies is what we're talking about, and it's all these investors seeing growth and value come into play, and also the kicker of a safe haven. So the 3 E's are, if I look at what's working in the precious metals market, it's exploration success, like Great Bear is an example. It's the sort of standard bear, but there's Amex, there's Rupert, there's a whole bunch of them. Then earnings success, dividend increases, Newmont, American Barrick, divesting of things they don't want, raising cash, increasing cash, merging properties in Nevada to make them work better. And then you're seeing companies like Endeavor and Semiflow merging to build a better company, and hopefully that those mergers are all making sense. And then other companies taking over properties that were no longer being really looked at by some of the majors that had them in their portfolio, and a bunch of geologists and guys got together. K92 would be an example of that, and they focused solely on all the work that had been done by Barrick, added a new twist, brought in some really tremendous people, and off they went, and they got success. So I look for exploration success, earnings success with dividend increases, higher cash flows, higher earnings, etc. And I think if you go back to the 30s, and this is probably a fish story that's gotten bigger as the years have gone by, but many people, homestake, when gold was fixed at $35 and you could mine at 17, it was a money spinner that basically paid dividends to people that got them through the dirty 30s.
All right, let's move on to some of these stocks here. And, this is where people can actually put their money. I guess we'll start with Barrick's basically the second largest producer now. I don't think they're the first.
Yeah, it's another. I'm looking at just while we're on this chart, that chart where there were all the takeovers. You've had Orico, Delradian, Continental Gold. There's I just forget them all right now, but there's a whole bunch of companies that were taken over. And if you go back to 2001, 2, 3, 4, if you weren't in Wheaton Gold or Northern Orion or Minto Exploration, I'm just naming some that were taken over. You were watching paint dry for a lot of the time. There was a three-way merger with Kinross, TVX, and another company. So this time rhymes that early mid-ish but earlier 2000, and that's exactly what we were talking about on the previous slide, happening in the markets right now.
All right. Well, I know your chair is very excited because we can hear it squeaking. But let's get to Barrick.
Okay.
Now, there's two charts here. One that you did up in January of 2016, and one that you did up of January 2019. You want to go over these?
Yeah, this is a little bit. The first chart is a bit of hindsight capital. I mean, I'm just trying to build our credibility in talking to people about this, in a sense that we were clearly bullish at $17 American Barrick, and it had three targets. Two have been met, and the third outstanding target is $76. And when it was $15, $17, that looked like crazy talk. But really, with what they're doing and the assets they have and the leadership that's running the company, for the first time, I kind of have a belief that the fundamentals and the technicals are matching American Barrick.
Okay.
So, yeah.
Um,
And you see how it's catching up to the gold price, which it usually traded above the gold price for most of its life in that chart.
So what would be the highest target you would put on this now? But I mean,
Well,
because
you've got to go through the old highs, but my highest target is $76. Remember that I should just explain a little bit about the charts, because back when none of the gold stocks were moving, there was a special stock that was moving in terms of relative strength called Kirkland Lake. And it had at $3, $4 a target of 7.50, 10, and 13.5. Having achieved 13.5, it built over three more targets of 19, 25, and 42.5. And it actually went higher than that 42.5. It went up to 60. It's a process where corrections are really good for this business, because yeah.
Okay, so we can go through a bunch of these charts here, but I think honestly, like, you've got Kinross here, you've got Yama, you've got K9, Great Bear, the example of Great Bear. But let's get to the new idea example.
Okay. Yeah.
Because you know what, this is, if you go down Wes, it doesn't say a number. Just go down to where you see new idea examples there. Here we go. All right.
Okay. Well, IAMGOLD. I mean, some of these stocks are IAMGOLD. I can see the symmetry and the fractal patterns in these stock charts. And if people study them long enough, they can, but you can see the explosive move that it made after breaking its downtrend. To me, it looks like it's doing it again. It's built 3 targets. It has, in its life, traded higher than the price of has traded higher than the price of gold, but this is one that largely had most of their assets outside of North America, and now they're building a mine in Northern Ontario that could represent about 50% of their earnings. And so maybe we'll start to see institutions and investors warm up to IAMGOLD, which has been a laggard. And that's kind of the theme of some of these charts that I'm talking about. They have been laggards for a long time. And now with the price of gold, they have a high cost of producing gold. And now these ideas, the good ones, IAMGOLD has about 800 million in cash. It's not going out of business. We can start to see that this is a company that could do what it did in 2000, after 2009, and that corrective action in 2009.
So if you're having a hard time following along with this presentation, producer Wes has figured out a way to get the presentation into the YouTube comment section. So you can click on that and bring it up in another tab, and you can follow along that way too. So, all right, we're going to move down from IAMGOLD now down to Premier Gold.
Yeah, Premier Gold is one of those companies that's got 3 producing mines, well run, really well done. Used to be much higher back in 2009, 2008. It suffered. It did exactly what mining companies are supposed to do. It bought assets at essentially the bottom of the market from Yamana. And that's what gold companies and mining companies are supposed to do. And so I think the worst is behind. The chart to me suggests the worst is behind. And this well-run company looks like it's built 3 targets. And I think investors, could do pretty well on it. I have to couch everything.
Well, friends, so we're going to go through a few more of these, but that presentation that you have in the YouTube section, that shows a lot of John's, new ideas. And I'm sure that's what people have been sort of waiting for is, okay, yeah, we've gone through these charts and the who, what, and why, but what are the ideas? What are the companies that I can kind of, look to put my money? So you'll see these charts, John's, got his first, second, third target. And the reason why we went through all this stuff today was to sort of validate the past and the history that we need to look back at. So even over the last 2 years, for example, I'm going to go down to Wes. Can you go down to Metallic, MMG? It's going to be towards the very bottom. Okay, this is a company that's an exploration company. Yeah, it's all the way down at the bottom. But just to give you guys an example, it's way down there. Sorry, Wes. There it is, MMG. So here, MMG, your first target was 45. So the buy area was around 31. Your first target was 45, second target 75, third target 90. That third target was just met. And so you did this chart in May of May of this year. So that's pretty incredible right there.
I sent it out to people. The
LinkedIn, right?
yeah, the first chart was done in April. I don't know exactly when I posted it, but yeah, you have no. I don't know when they're going to hit those targets, if they're going to hit them at all. But so that they don't always work. So I have to put that disclaimer out there. But when targets are exceeded, it's a pretty good indication that that bigger picture target of 280 will be realized at some time in the future.
Okay. Well, full disclosure, I actually own some metallics, some MMG, and we got in at 20 cents. So it's been a big win for us. We've got our warrants. Listen, I got to ask you, John. All right. Just between you and I, if I'm looking at this presentation, give me 3 to 5 that, that you just have your, a gut feeling. These are your 3 favorite, speculative charts to look at with the targets. Like trim the fat for me with this presentation, basically. Where should we go here?
Okay, well, I mean, you have to stick with the premier, the IM Gold, Alamos, our companies. Alamos, light premier, bought Richmont at the bottom of the market. The stock was punished. So Alamos, Premier, and IM Gold are all producing gold companies in pretty well good jurisdictions. Alamos pulling back and buying in Canada, Richmont. For junior speculation, Metals Creek is an idea. It has $1 million in cash, $2 million in marketable securities, and it's drilling right now in a past producing gold mine, the Donna Lake mine in Ontario. It's a banded iron formation, could be good. Almaden I've liked for a long time. I've been in it since discovery. And it's a half gold, half silver mine waiting for a permit in Mexico. It's roads, village, everybody loves it. And it's pretty well ready to go once they get a mining permit. And the other theme out there is Midas and Sabina. They're big tonnage operations. They've been a lot higher. They've been basically crushed from their old highs, gone sideways for a long time, and you're starting to see some momentum right now. I hope that helps.
Oh, it does. I was just, if you saw me with my head down texting, I was texting our producer Wes saying this is a huge value to trade in, these new ideas. And I was asking him if he can drop it into our Discord, so people can have a look here. I mean, really, to summarize, these are the charts that these are the companies, the fundamentals, and the charts, and you projected your targets here. So, maybe we've been going now for about an hour. How do you want to leave it today, John?
Yeah, this is it's looking at the foundational work of a sector. You look for themes or fractals or chart patterns, and then you dig for the fundamentals about what could make them go higher. And the other thing is that it's important to have a basket of them. That's why in the earlier part of the presentation, there are actual portfolios of 10 or 12 names because, throwing a dart at one stock, it's tough.
Yeah.
You don't know.
Well, now we've given, for example, Uncle Dean, my uncle, a whole bunch of, of your ideas where he can, kind of try to pull 3 to 5 of his favorites. And there's, the beginning of your basket.
Yeah.
Yeah. All right. Let's see where the gold price is right now. Let's see. We're sitting around 1970. I have a feeling it's going to be a good week. I'm thinking we go through the $2,000 mark again. What do you think?
I think we're on sort of the end of a leg down, and that we're going to have a fifth leg up here, and we're going to go to new highs in gold and I think that the XAU and the Hue are going to do well. So we'll see.
And now the best place for people to follow you would be LinkedIn, correct?
LinkedIn or Twitter.
Twitter?
Twitter, it's at AUENBOY.
All right. And everyone knows where they can find me. If you're not in our Discord server, you should be. That's where all the action is every day. I will be putting this presentation in our energy mining chat room. It's in the YouTube comment section of this live stream. Again, so this is something that you can, go to and on your own time, look at John's charts, back it up with the fundamentals, and keep paying attention. Keep, checking out all of our content. You got the weekly wrap up. John's always putting stuff out on LinkedIn. John, thank you very much for joining me today on a Sunday. I know yesterday you had a power outage and you basically spent all day at the office catching up on work and getting ready for this. So we do thank you for that.
Okay.
And I'll leave the final words to you, my friend.
No, I really appreciate you having me on. I wish all those precious metal investors out there do very well in the next few years.
Absolutely. And as you always tell me on the phone, this is a potential postal code changing once in a lifetime opportunity, over the next 3 to 5 years, right?
Yep. That's what I believe.
Alrighty. All right, friends, have a fantastic week coming up here, and we'll catch up with you another time. Thank you.
All right. Take care.